What can we do to spur the growth of the impact economy? I'm really delighted to be moderating a plenary session here with outstanding leaders to discuss this topic. I'm going to also invite people from the audience to join with their questions. You'll see some microphones on each of the sets of stairs. If you would like to put a question or a point, please do just stand at one of those microphones. So, to get us started, I would like to ask each of you in turn to introduce yourselves, your organization, and our first question: what are you actually doing at the moment to spur the growth of the impact economy? Please.
Thank you very much, and thank you for the invitation. It's a pleasure to be here in Malaga. My name is Jorge Rubio, and I head the social finance team for Citi Globally, which is a specialist unit that is based in London and supports clients around the world that are expanding access to services promoting economic inclusion, like food security, health, education, and projects as well in telecommunication and solutions that reach the last mile. So do you want me to stop there and then we'll come back, or do you want me to talk about what we do?
Let's do that in a moment. Gaspar.
Okay. Thank you. Gaspar Verrier. I'm the Impact Investment Advisor and Financial Committee member of Fondation Daniel and Nina Carasso, and I'm also a French NAB member. Carasso are a family foundation in France and Spain with an annual budget of 20 million, working on sustainable food systems and art and citizenship with an embedded focus on climate change. They invest their endowment in coherence with mission and values, so that derives a zero fossil fuel exposure, an impact investment allocation of 75 million euros, roughly 15% of the endowment. And they are both a philanthropy and a demanding small institutional investor, and that's the caps that they wear every day in their day-to-day activity. Actively exploring the continuum between grants and investments. And I'll give if you allow me, three local Spanish examples of that. TINA is a seed funding program and investment readiness that involves a loan by the foundation and acceleration by Ship2Be Foundation, who are probably in the room. There's also a small announcement on our behalf. A commitment to CREA's Impact Investing second fund first closing in a few weeks, where hopefully this comes from the impact investing allocation, but there's a double-digit expectation on what the fund can achieve. And then the third Spanish example that we can give is Suma Capital, which are a green infrastructure energy player, and that we managed to invest out of the non-impact allocation, which is also a way to show that the general endowment is being pushed towards sustainable solutions. And so our role, as we see it, is really to strive to act, in that instance, invest, influence, and inspire. The foundation is very keen to share its journey with foundation peers. And I guess this, to sum up, is really the idea that they strive to put all the foundation assets to work for the mission.
Fantastic. Thank you so much. Ruth, please.
So good morning. Thank you for the invitation. My name is Ruth Pasman. I'm a director for funds programming and implementation at the DG of Employment and Social Affairs of the European Commission. Thank you for the invitation. What we are doing to support impact financing. I think I would like to mention two main issues. The first is that we have launched an action plan already a year ago, maybe 2 years ago nearly, to support the social economy. A very ambitious action plan, and with it, lots of actions. And within these actions, I think two are worth mentioning. One is a digital gateway, which puts in a single place all the activities, policies, and financial instruments that exist for social economy entities at the European Union. And the other is, so it's a portal. And the other is a recommendation to member states to create a framework conditions for a successful social economy. As you know, the situation in Europe is quite different. In some countries, social economy is very developed, and in others, it's just starting. So the idea is to have a framework condition. This is a quasi-legal instrument, and I have to announce that there is agreement by the member states on the proposal of the Commission, so this will now go on. And then the second area is we have this fund called InvestEU, which does equity, guarantees, and loans, and within this fund, there is a so-called social investment and skills window, which has 2.8 billion, and this is investing, of course, interrail, also on microfinance and also on impact investment.
Thank you very much, Ruth. Hamdia.
Thank you. Thank you very much. Good morning to all of you. My name is Hameed Isa. I run an investment management company called Savannah, and I'm a board member of Impact Invest in Ghana. What are we trying to do? We are just trying to move the money. So when we started off, we looked at the ecosystem, and we wanted to understand what is required for us to be able to really make the impact that we're seeking to do. And we had a series of conversations, and we look at the challenges that emerging managers face. If you're a first-time manager, you come from Africa. In fact, your risk level is higher. And if you're a woman, it's quadrupled. And we have lots of SMEs in the market that have difficulty in raising capital to scale. So we decided that we need to also look at how impact capital flows into Africa. And we realized that it's just about 2% of impact capital that flows into Africa, which means that we need to begin to look at domestic institutional investors and how we can mobilize capital domestically. So we look at our financial services industry, and we realize that there is a growing pensions, which does not invest in the real sector. And we decided to think about how could we unlock this pension money. So we created the Pension Collaborative, discussed with the largest pension, tried to understand what the issues were, and we designed a vehicle, a fund vehicle, which is called a Progress Fund, Chigaba. And the idea is to mobilize this institutional pension money to be able to invest in funds, SME funds, that would invest in these companies. And so that's what we've been up to over the last year. And we have launched the vehicle. We've launched the vehicle. We are still fundraising. We have had 2 pensions, soft commitment. What the pensions asked were very clear. They said, we want to do this, but we don't understand it. But we also know that it's very risky. So the vehicle that we've created is a blended vehicle. And so we are looking for catalytic layer. And then we build on the commercial capital from the pension. So that's where we are.
Thank you, Hamdia.
Thank you.
And this is all in local currency. Is that right?
It is a local currency fund. We're going to invest across West Africa. It's a 75 million. It's a proof of concept for us because it's been very difficult trying to leverage private capital locally. And so for us, it's a proof of concept. We want to have a demonstration effect. It's a 75 million fund. We want to invest in 10 funds, investing across West Africa. And our target is to invest in about 200 companies, creating about 25,000 jobs, and impact about 100,000 lives. When we do this, then we can now help other sister NAVs to begin to look at these vehicles. There is some wonderful things going on also in Nigeria with the wholesale fund, which is about $1 billion. Nigeria is huge, so which is about $1 billion, and we look forward to getting that also done so we could co-invest in these funds so that we can invest at scale.
Thank you so much. And I think these new pools of capital in local currency, hugely valuable, and GSG is certainly looking at this very carefully. I came to you and you had just a brief moment, so tell us more.
No, well, Citi is a commercial bank that is present in over 90 countries. I mean, physically present. We have branches, people, teams in all these countries, and local currency capabilities, which you just mentioned, which is a very important component in the fund mobilization in the last mile in emerging markets. So in the last, let's say, 50 years, the bank's journey in the impact space has evolved significantly. So just to give you an idea on how our thinking is evolving as well, back in the 70s, it was mostly through the Citi Foundation investing in industry building initiatives like Action and others, women's wear banking, that were basically developing the microfinance industry around the world, investing also in financial education, financial capability building. So that impact could be measured, or the funds mobilized could be measured in probably millions of dollars. So in 2005, we decided to create a specialist team as a proof of concept, which was a business team working across all the platform in the bank in emerging markets, to start working with these microfinance institutions and local banks and mobilizing local currency funding, which is what they needed. So focus on innovation. We developed our first partnerships with DFIs, with development finance institutions, like the DFC, like the Asian Development Bank. We did the first ever investment-grade bond for a microfinance company in Mexico, the first securitization of microloans in Bangladesh for BRAC. We did the first IPOs in the industry for SKS, for Compartamos in Mexico. So a lot of focus on innovation. But what happened in the last couple of years is that we've expanded the scope significantly of what we do. So I was mentioning before the categories of social. It's not only financial inclusion, it's all access to basic services that the same communities need. So in that previous phase, the impact could be measured in probably the tens of millions, hundreds of millions. So in this new model, which it's basically recognizing this as a business in the corporate and investment bank, measured as a business with obviously impact metrics around it and goals. We've made commitments to reach 15 million people through our funding by 2025, of which 10 million are women. We also made a commitment to mobilize 1 trillion in sustainable finance funding by 2030. So goals, but a recognition that this is a business, which is what is important. Under this new framework, Citi Treasury issued for the first time a social bond for emerging markets. It was a $1 billion transaction. Making the commitment to investors that the use of proceeds of the bond is going to be used to finance these types of projects across these categories. The framework is public. Obviously, there's a second-party validation. There is an audit and reporting. So it's very public and transparent, the way we are allocating these resources. And we continue to focus on innovation. We closed our first securitization in Kenya, the first one ever in the Kenyan market, where the use of proceeds is to finance solar home systems for people that live in communities off the grid, so people that are getting access to electricity for the first time. So because people can't buy these home systems, these systems are financed, so these receivables are being securitized, and we're selling them to the market and bringing private capital. So that's the key metric here. The message is that if we cannot move the needle, if this is not really looked at as a business, and if we don't mobilize private capital, because we know that given the size of the gap, public money is not just going to make it alone. It needs to be private capital mobilization.
Fantastic. Thank you so much.
So by the way, just to finish on this, I was talking about how we measure in terms of funds mobilized. Last year, which was our best year, now as a business, we mobilized $3 billion globally for these types of projects. So you can really tell the difference in the approach from philanthropy to a business where the impact can be multiplied, and we can leverage our capabilities across the world.
Really outstanding. Thank you. Now let's have a quick round of what barriers have you been seeing? And let's start with the other way around. Hamdia.
Yes, the barriers, thank you, Cliff. The barriers are many. A couple of which includes the regulatory environment, and also getting really catalytic investors to be able to play a certain kind of role in order to unlock more funding for the ecosystem, and also building the capacity of local institutional investors so that we'll be able to mobilize a capital locally. But we can't do that if we are unable to get more catalytic funding, so we must have a different kind of view in terms of how we want to do impact locally. So we need to begin to look at how to catalyze some of these effective structures which are more efficient, who can actually leverage more private capital locally for impact. So that's one of the barriers that I see, that we need to begin to look at it in a way that is more collaborative and more catalytic inclined.
Thank you so much. Thank you. Ruth.
Thank you. In Europe, the market is actually quite developed, but it's very different in different countries. And I think the main barrier is really to structure it, and in a way also to make it really European. How to do this? Now, we have done it sort of with the taxonomy regulation for the environment, which has had a very strong impact in framing it. We have not done the same for social. Social is a bit more complicated because local conditions have an impact, and also the real situation, I mean, for example, whether there is a strong welfare state or not has a strong impact. So the situation is not a global, you have to take into account of the local initiatives. So now we are in the phase of studying, if you want, studying what we should measure for impact, studying what data should be available and data transparency, and studying how you could indeed structure the market or sort of rationalize, I don't know, reform towards something that can be more conducive also to, overall understanding. Everyone agrees on what the definition of impact is, of the measurement, and so on. And therefore, at that point, perhaps the Commission could consider regulating. But I don't think we're there yet. We need first to learn more how to, how it could actually be acceptable throughout the market. And if standards emerge bottom up, even better.
Thank you. Gaspar.
Yes, on that one, I wanted to echo with what Martin Wolf said yesterday, that you can't make changes unless you know what needs to be changed. And that resonated because I think we strongly feel in the foundation sector that you really need to derive your actions and investments following a theory of change. And it's actually the day-to-day job of foundations to identify, groom solutions, but forming a systemic view of the imbalances and what needs to be solved. And that also echoes a conversation that we had with Uli Grabenwater, whom I guess you know well, that said that for all the individual impact asset managers that we will fund and their direct investments in certain part of the solutions, we need to be much more systemic and strategic in terms of deriving the investment strategies from the theory of change. And there I invite and engage particularly new players in the impact field to reach out and engage with foundations, because it's the day-to-day job of foundations to find those webs of solutions, and really think deep about the theory of change on various issues. If you look for Fondation Carasso, for instance, on sustainable food systems, you have to solve so many issues, so you need to have a systemic approach. And also as a philanthropy and grant maker on that field, you cannot be content with NGOs. You have to go deep in what the private sector is doing. Engage/compromise, I don't know, but that's a really push to get out of your comfort zone.
So bringing together the people that you need to make a system change. How would you say?
That's a good question, Cliff. I think one of the key challenges that we've had through the history of our work has been scale. Scale is the name of the game, and I think what's really changing at the moment is the emergence of new technologies. People are now more connected. They have access to mobile phones, smartphones in many cases. So you're seeing now that what could be viable, let's say 15 years ago, was a very small segment of the market. Now it's much bigger. So you're seeing these platforms scale. So that's very promising. But I agree with the panel that metrics, as we expand the categories of influence, to housing, water and sanitation, measuring that impact and having standard ways of looking at impact across the industry is also very important as we move forward. And then thirdly, and probably the last one, and us as a business, obviously is we have capital allocation, we have to meet requirements for the bank, so we don't have any subsidies at all in what we do. Everything that we do needs to meet or exceed return requirements. But that creates the need for partnerships, risk sharing, risk mitigation, so that we can make better use for capital and also give back some return to our shareholders, but with social impact at the same time.
Yeah. So I think actually you're getting into the solutions as well as the barriers. So let's get to those solutions. We've just got 6 minutes left. So tell us what you see as the single most influential step forward for the impact economy. Gaspar, I'm going to come to you first.
I was hoping to go last on that one, but that's okay. No, I mean, the odd thing that comes to my mind is really for all stakeholders in the field to get out of their comfort zone, because I think that if we are able to do that, it's a sign that we go in the right direction. So I guess it's roll up your sleeves, the way Ronald Cohen does it, and I guess you're familiar with it, and move out of your comfort zone. And for that, I wanted to say a big thank you to the program team of Carasso Foundation in the room, because that's what they do every day, taking ownership and responsibility for the investment field. They are on a very steep learning curve to embrace that, and I think all stakeholders should think about, what are they not in that they should also be gaining skills and understanding to be fully present in the field and making all assets, financial, human, work towards the transition.
Thank you. That's great, Ruth.
Thank you. Well, as I said before, I think there is, let's say, a need for some sort of consolidation to structure the market against, so that there is more trust and confidence in the system. I think it's very close to the tipping point in Europe. So it's enough, you just need that amount to be able to really become mainstream in a way. But to become mainstream, on one hand, you want to have a lot of bottom-up initiative from lots of actors. It's investors, it's NGOs, it's political, but at the same time, then at some point you need to rationalize it.
Thank you. Single most influential. Please, Hamdia.
So I would say collaboration, transparency, and courage. So collaboration in such a way that we need to work together to ensure that we achieve the impact that we're seeking to achieve. Everyone is doing their own bits, and we need to be able to be more collaborative in the way we work. And transparency, because we need to be able to tell where challenges are, and also to be able to report, because you see a lot of reporting on impact that that is not really what's happening. There's been a lot of impact discussions, and the data doesn't show what we hear. So it means that you need to be more transparent on the impact reporting side. And also courage. We need change makers, and you need courage to be a change maker. We need people to raise their heads and say that these are the challenges we want to deal with. It's a challenge that faces us, and we really want to deal with it. And that is where we need catalytic investors to look at the way they do their investment. And also we need to get private institutional investors to also have the courage to try things, to look at their asset allocation and say, well, it is not a basket case if we go into impact, that actually we can make a good return and also be impactful and be more intentional in what they do by that.
Thank you so much.
I think it is the recognition that social activity is a valid asset class. The emergence of green bonds, social bonds, that has push the industry into incorporating KPIs and social metrics into transactions that we close. Obviously, there's a lot still to be done. I think, I envision a future where every transaction that we do, takes into account social outcomes as part of our decision making, but so we still have a long way to go. But that's a good step forward. And I mentioned technology, which is fascinating to see these disruptive new models in East Africa, in Latin America, in India. This is fascinating to see because it really provides the scale that we were needing to structure meaningful transactions.
Thank you so much. So the validity, the new investment tools, the technology, the consolidation and the trust that the consolidation can bring, rolling your sleeves up, getting out of your comfort zone, being fully present as an impact actor, collaboration, courage, transparency, getting those standards through. There's plenty for us to do. I just wonder, is it possible to get the lights up in the auditorium? Looks like it. Let's just say, in 3 years' time, are you positive, hands up if you're positive, that we will have broken through some of the current barriers and impact will have expanded? Who's got a hand up there? I think that's almost everybody. Is there anybody who feels, no, we're hitting the barriers and we're not getting over the barriers? Let's be realistic. Is there anybody who's... Well, I think that tells us 8 minutes. 8 minutes to success. Thank you very much indeed.
Thank you.
Thank you.
Nice meeting you. It was a pleasure. Thank you.